Hi, and welcome to this video. Previously, we saw how to calculate unlevered free cash flow. In this video, we'll go a step further and calculate net cash flow, the actual change in cash experienced by the company for the period under analysis. To reconcile UFCF and net cash flow, we need to take into consideration these four items: interest expenses, the difference between taxes and operating taxes, delta financial liabilities, and delta equity. Let's start with the first item, interest expenses. We just have to link to its value for 2012, and that will do. In order to calculate the difference between taxes and operating taxes, we have to go to the P&L sheet and select the amount of actual taxes paid in 2012 and subtract it by the theoretical item operating taxes, which we have in the sheet cash flow. This will mitigate the difference which was obtained when we considered taxes on EBIT margin, ignoring tax shields from interest expenses. The third item is delta financial liabilities. As we can see from the name, we are talking about a liability. Therefore, we will go to the BS sheet and have 2012's quantity minus the one for 2011. The increasing liabilities from one year to the other result in a positive cash inflow. Lastly, we have to consider changes in equity, among which could be dividend payments. Shareholders' equity is given by opening equity plus net income result for the year, plus or minus other equity movements such as dividend payments or increase of capital, etc. Therefore, in order to calculate equity flows for 2012, we have to consider the difference between the 2012 closing amount of equity and the 2011 closing amount of equity, and subtract them from the net result for 2012. After we have taken into consideration all of the items and obtained a net result for net cash flow, it is advisable to make a check whether net cash flow movements correspond to the ones observed in the balance sheet. In two of the rows below our table for cash flow calculation, we can type opening cash and closing cash, as I am doing here. Opening cash is the amount of cash available at the end of the previous financial period. In this case, the opening cash for 2012 will be the cash available at the end of 2011. We can link to the value which is in the BS sheet. Closing cash will be given by the sum of the net cash flow for the financial period and the opening cash at the beginning of the period. If we worked correctly, this amount should be equal to the one that we have in the BS sheet. Let's link the amount of cash in the balance sheet here and perform a check. It appears that we have worked correctly, as the difference between the two amounts is 0. This is how we calculated net cash flow for a given financial period, and how we make sure that our work was done correctly. Thank you for watching, and if you have any questions, we'll be glad if you drop us a line.